I want to be in. Today I want to be able to wanted to be able to provide you value about how to get them lower time from entry with the confluences and how to be able to execute on it. However, the the how I before we get onto the trade breakdown, first we've got to understand what are the steps in order to be able to get a lower time from entry, and what are the pros and cons and how to be able to identify them in order to us to be able to get an understanding. Okay, in order for us to be able to take a trade at low time from entry, we've got to understand the steps in writing format in order to be able to be as simple as possible for you guys, as well as inside the description, inside the comments, there's going to be a link to a Google document where we'll have the trade breakdown in writing format, the breakdown of the pair which allows it to be able to show the low time from entry, which is around 20. I'm not sure 100% what the RR was. Okay, and it's going to be Google document in the comments. So make sure you go check that out. The steps in order for you to be able to understand the low time from entry. The first major step, the market has to tap into a POI. The market taps into your POI or potentially the entry. For example, if you had a POI right here and you got in right here, then the market tapped into your POI that you already had an entry on, and you want to look to go get second entries. This is what I mean by market taps into POI. Second, market gives us initial reaction, as you saw right there. Market gave us some bearish pressure in terms of selling and bullish pressure in terms of buying. Then you got to scale down to the 1 minute, the 3 minute, the 5 minute, 10 minute. Got scale down in comparison to the higher time frame and find an OB that has a breaks of structure. That's what we need to do as a first step. Go to a lower time frame. You see if there's an opportunity which has a break of structure, maybe some extra confluences and liquidity. Ideally, a premium level makes it more high probability. Find it has to break structure. The way we able to take lower time frame entry, it has to break structure. And the fourth step is execution. Taking the trade, no hesitation, taking it. Now the pros. Sorry, this is meant to say pros. The pros of taking lower time entry is small pips. The small pips allows us to have a high risk to reward. And if it has a high risk to reward, and this allows us to have more potential profit than potentially the first position. The first position, meaning the higher time frame, maybe 20 pips. Potential profit maybe 20 pips. If it's 20 pips, that means you potentially the risk to reward for a trade be 1 to 4. However, if you scale down to the low time frame, you get 5 pips stop loss. That same exact target, the same exact TP as the last TP could be 15R, could be 14R, depending on where you place the TP level. That is the pros of low time frame entry. However, it does come with in my opinion, some cons, because when they're going on a lower time frame, there's more OBs, there's more order blocks, which may look as valid as each other, may both all have a broken structure, which may all be unmitigated. Now, if they're all unmitigated, that's so many opportunities. However, potentially the market may only respect one. So what do you have to do? You have to be able to. That's one of the cons, as well as the lower time frame entry market is much more volatile. Why? Because lower time frame is much more quicker compared to the 4 hour, which the candle comes every 4 hours. However, 1 minute comes every 1 minute. You never know. Market could be too fast and you're unable to be able to react. You're still hesitating. This could be potentially lead to the opportunity getting mitigated. Now, if that opportunity is mitigated, that means you're unable to execute because you couldn't execute fast enough. Potentially, you were hesitating. Compared to on the higher time frame, you're much more quick, you're much more diligent, you're much more careful. Also, on a lower time frame, it can cause some people to be able to rush trade, to jump the gun, to potentially not shoot the gun whatsoever. That's what you've got to be able to understand. It has its pros. In my opinion, the pros does outweigh the cons, because if your risk management, which will come into that video sooner or later, if your risk management is good as well. Now, if you understand your risk management strategy and your risk management strategy is good and it works for you and you're disciplined to it, I think the pros outweigh the cons heavily. However, this is the steps. Quick breakdown. Steps. First step, market taps into a POI. Second step, market gives us initial reaction. Third step, scale down to the lower time from entry. Find the OB that has a breaker structure. Ideally, a premium level makes more high probability. The fourth step, execution. That's what we do. We execute. Now, down to the high. Now we are going to go down to our thing. However, just to tell you guys again, there's going to be a Google document inside the comments for you guys to be able to go see, get in writing format, which I did take out my time to be able to do that by the time the video is up. Would appreciate if you guys could go see it. Give me your thoughts in the comments, things of those natures, and give your thoughts in the comments. Okay, now the breakdown of the trade using lower time frame entry. So on the higher time frame, on the higher time frame, market structure is clearly bearish. Forming what? Lower lows, lower highs. Lower lows breaking structures, lower lows, lower highs. Market right here, lower lows, lower highs, breaking structure. You can see the whole trend going in the down, because if it wasn't, it would be going in the up. But clearly, you can see clearly, we've been going in the downtrend. Okay, now I saw that on the daily and weekly, saw the same trend, and I saw key piece of liquidity that was previously induced right here. Market came, induced these set trend lines, use that liquidity to sell, use the liquidity to give us a nice change of character and fill some imbalance. See, inducement of these trend line, boom, and when you go into the lower time frame, after the market induced it, now potentially here people have their buy. People, retail traders, for example, people that trade trend lines may use this push as a confirmation for the market going bullish. Some people going bullish, place their buys. Now markets such as smart money are looking to be able to use that liquidity in order to be able to fund their what? Sales. Okay, when we got into there, we see supply chain forming. Market tapped into the supply chain and induced all of this, what I would call an area consolidation. Area consolidation, we had that manipulation, then we had the breakage, then we had the initial reaction. However, this entry, there was no breaker structure. So guess what we did? We stayed patient. Market tapped in and gave us a what? Breaker structure against what? Multiple lows. Tap, broke structure against this low, as well as this low. Many breaker structure would indicate to me that potentially show that this is a valid order block. This is a valid supply. So market is yet to come, and creating what I would call a smart money trap. This smart money trap is right here. Market came up respect. However, what I saw from a YouTube video, guys can literally go check on my channel how to identify smart money trap. I saw much more high probability setup, and I saw potentially the market looking to be able to induce early buyers, people who are jumping the gun way too early and didn't look at higher time frame narratives such as this more high probability supply chain, which had it previously induced liquidity and area consolidation, manipulation, as well as had its distribution. Market tap. Also, we had the smart money trap. Market tap. Potentially, if you go into the lower time frame, Market tap and gave us some initial reaction. However, it did reduce. So I was patiently waiting for the market. And I had my first initial setup right here. Yeah, I had my first initial setup right here, targeting this order block right here. Only 1 to 5. As I said, the higher pip stop loss reduce the thing. However, compared to the lowest pip stop loss, it's less likely to get stopped out, as it gives us the trade a bit more reason to breathe. Market tap and give us some respect. Now, when I saw the market come tap, induce all of this liquidity, this Asian liquidity tap, gave us some reaction. I immediately went on down to the lower time frame. And what did I see on the lower time frame? An order block presenting itself. A lower time frame order block. This order block right here. As you can see, we had that liquidity inducement. That liquidity induced right there, plus the break structure. Whilst all of this in a market POY, which also gave us our initial reaction, as well as it has liquidity, induced liquidity right there. And guess what it did? It broke structure, which is one of our key rules. It's SMC. The order block must break structure in order for us to be able to even contemplate about taking a trade. Market did just that. It broke structure. It induced liquidity. Also had liquidity right there. As soon as I saw that market did not tap into our POY to this order block, I set my my thing 3-4 pip stop loss inducement. I set some people potentially be set at the premium line, however I did not. I set at the proximal line, and then I targeted the exact place that I targeted my previous thing, as I said in the breakdown of how to identify smart low time from entry. Quickly hold on. Market tap and give us a 1 to 25. What you got to understand is this: market came tapped to our previous market POY. It gave us a liquidity inducement. Once it gave us our liquidity inducement and it broke structure, I knew it was a valid lower time from entry for me to be able to execute on without any hesitation. Now, when the market did come and give us liquidity inducement, and as well as it gave us more liquidity, I executed without hesitation, because I know how volatile the markets are, and how I know if I keep hesitating, then potentially the market could be faster than me hesitating and me breaking down decision. So I took it without hesitation and I targeted this low. The reason why I targeted this low, because it was premium level, as I didn't want to target too much, and I just targeted simply this. And I targeted with our previous trade, which was a 1 to 5. Think about it, compare 25 pips to 1 to 5. This simply look as simple as that when it comes to lower time frame entry. The possibilities of the pips and the risk reward you can get compared to higher time frame. 2 hour. This 2 hour order block, 15 pips, 1 to 6 roughly. This one is a 1 to 26. And targeted in the market just like that hit. As simple as that. What you got to understand, some people, they make it too complicated. The steps as follow. Simple. I followed these steps. I saw the liquidity, I saw the breaker structure inside of POY, which gave us an initial reaction. I took the entry without I didn't hesitate, and I executed. It comes as simple as this. The first step, market taps into our POI. The second step, market gives us an initial reaction. The third step, we scale down to the lower time frame. The initial reaction potentially could be the order book that we first took out, and we want to get a second entry, potentially lower pips, high risk to reward, so we can get more money, more profits, potentially more risk to reward, and the first step, we scale down to the lower time frame. We find an OB that has a break structure, ideally a premium level, but it has to break structure. The fourth step, we execute. As simple as that. As simple as that, which I took a 1 to 30. As simple as that. Inducement, supply chain, smart money trap induce, which I saw. If you guys want to understand what smart money trap is, you guys can go into my previous video, which I had a detailed video, or you can look at my shorts, which I show a picture of the breakdown of the breakdown of how to identify smart money trap. The video is on my channel, and we saw the supply chain market tapped into our POI, gave us initial reaction. We see the liquidity, we saw the break structure, we saw the opportunity, and we took it. Execution. It's as simple as that. You've got to understand how to get a lower time from entry. You've got to master this in order to be able to get the high risk to reward and smaller pit stop loss with the same risk that you risk for the bigger trade, the bigger stop loss. Be able to capitalize on the markets. When you understand how to capitalize, you understand how to be able to gain more profits and understand. I hope you guys understand how to master low time frame interest through the simple 1 to 4 simple model. If you guys want more writing format, maybe it more helps you, I have in my comments a Google document for you to be able to go see and be able to give your thoughts in the comments. If you guys have any question whatsoever, leave in the comments and I will get back to you. And yeah, thank you guys for watching, and let me know